Welcome back to the Personal Finance Podcast. We're doing a deep dive today. And, well, it's a question we're hearing more and more. Are we heading for a financial bubble? And to help us unpack this, we're going to be looking at what legendary investor Charlie Munger has to say about it. He's been sounding the alarm bells lately.
Yeah, and what's really interesting is that Munger, he doesn't just throw that word bubble around lately. He seems genuinely concerned that we could be facing something with even, bigger consequences than just a regular recession.
Wow. So it's like he's saying, remember 2008? Well, this could be even worse. What's got him so worried?
Well, one of the biggest things is all this money printing that's going on by governments all over the world. Munger's point is that just flooding the system with money, well, it might seem like a good idea in the short term, but it can cause some pretty serious problems down the road. He actually compares it to what happened in some Latin American countries where, they went through these periods of excessive money printing and it led to crazy inflation, economic instability, and in some cases it even helped pave the way for, authoritarian regimes.
That's a pretty scary historical parallel. I mean, it makes you think twice about all this free money we've been seeing. What kind of price are we really going to have to pay for it down the line?
Exactly. And that leads us to another point that Munger brings up, which I find really fascinating, the idea of what he calls a Volcker moment.
Okay, now for those of us who maybe weren't paying attention in history class, what exactly is a Volcker moment and why does it matter now?
Right. So a Volcker moment refers to what happened back in the late 70s when Paul Volcker, he was the Federal Reserve Chair at the time, basically stepped in and took some really drastic measures to fight inflation, which was totally out of control back then.
Okay, I vaguely remember learning about this. What did he actually do?
He really went for it, significantly hiked interest rates. And yeah, it did lead to a recession, but it also worked. Inflation came down.
Mm.
Now, Munger's point is that those actions, they were tough, but they were necessary. And he's not so sure we'd see that kind of decisive action from our leaders in today's political climate.
So let me get this straight. We've got all this money printing happening, inflation is a real concern, and on top of that, Munger's worried that our leaders might not have the guts to make the tough decisions, even if they know it's for the best.
Yeah, basically. And as if that weren't enough to worry about, Munger is also concerned about another factor that's having a huge impact on the markets these days: the rise of passive investing, particularly index funds.
Okay, now this is something I've been wanting to ask you about because we hear so much about index funds, but Munger doesn't seem quite as enthusiastic. What's his issue with them?
Well, he's particularly concerned about the growing power of these massive investment firms like BlackRock and Vanguard. They're the ones managing all these giant index funds. And they own so much of the market now that their decisions can have a huge impact on valuations. And, that could create some unforeseen risks.
So just to be clear, these firms, they're not like your typical stock pickers, right? They're basically buying up everything in the market, regardless of how individual companies are actually performing.
Exactly. And that's what has Munger worried. If everybody's just piling into the same investments without really looking at the fundamentals, what happens if there's some big shift in sentiment or an unexpected event?
Right, because it's not like the fundamentals always went out. I mean, we saw that with the dot-com bubble. Are we setting ourselves up for another fall?
That's the billion-dollar question. And yeah, I think even the most seasoned investors are watching this very closely to see how it all plays out.
And speaking of seasoned investors, it's really interesting to see how even Warren Buffett's company, Berkshire Hathaway, is navigating this environment. I mean, they're sitting on a pile of cash right now, more than ever before, but they're having a hard time finding anything worth buying.
Yeah, and it's fascinating. There's actually one company that Munger seems to think is a bright spot in this whole environment: Costco.
Really? With all this talk of bubbles and overvaluation, what is it about Costco that he likes so much?
Well, he's always been a fan of their business model. It's not just about selling groceries. They're selling a membership, a sense of community even. And they're really good at controlling costs and passing those savings along to customers, which creates a lot of loyalty.
So it's about finding those companies that have really strong fundamentals, a good long-term strategy.
Makes sense. But, Munger, he also has this, I don't know if it's philosophical is the right word, but he talks about envy being a driving force in the market. What does he mean by that?
Oh, absolutely. He makes this point that we live in this time of incredible prosperity, like more than ever before. But it seems like people are more miserable than ever, too. And he thinks that's because, well, we're kind of hardwired to compare ourselves to others. And with social media and everything, we're constantly being bombarded with images of, everybody else's success, which just makes us feel inadequate and can lead to some really, well, let's just say, not so great financial decisions.
It's like that saying, right? Comparison is the thief of joy. We're so busy trying to keep up with the Joneses that we forget to appreciate what we already have.
Exactly. And, that brings us to what I think is some of the most important advice Munger has for navigating these tricky financial waters. And it's really pretty simple. Embrace simplicity. Okay, so how do we actually do that? What does that look like in our own lives when it comes to our finances?
Well, with investing, he's a big believer in keeping it simple. He's actually cautioned against too much diversification. He thinks for most people, trying to manage like tons of different investments, it's just a recipe for, not doing as well as you could be.
That's interesting because we always hear about how important diversification is. Why does he think that?
He just thinks it's better to really focus on finding a few truly great companies or assets that you really get, you believe in, and sticking with them for the long term, quality over quantity.
So it's about really doing your research, finding the investments that fit with what you believe in, and then having the courage to stick with them, even when things get a little bit shaky.
Exactly. And that actually ties into another important piece of advice he has, especially if you're younger. Keep your expectations in check.
Now, why does he say that, particularly for younger generations?
Well, because the reality is getting those huge returns that, investors used to get, it's going to be a lot harder going forward. The economy is different, interest rates are different, the markets are just more competitive.
So we need to be realistic about what's actually achievable and not make these crazy decisions based on, these pie-in-the-sky expectations.
Exactly. And you know what? That actually leads to maybe the most important piece of advice, and it's something we hear all the time, but it's amazing how many people don't follow it. Live below your means.
Okay, so living within our means, not trying to keep up with the Joneses, all that good stuff.
All of it. Living within your means, avoiding those extravagant purchases. Those are such simple rules, but they can make a world of difference.
Yeah, it's about finding that contentment, that security from within, instead of chasing after all that external stuff, right? The fancy cars, the big houses.
Right. Because when you really think about it, true wealth, it's not about how much money you've got in the bank. It's about how you live your life, what actually makes you happy.
So where does that leave us? I mean, if we might be heading for a crash, and if those big returns are going to be harder to come by, what are we supposed to do? Should we all just, cash out our 401ks and buy Costco stock?
Whoa, hold on now. Let's not get ahead of ourselves. Remember, we're talking about big, long-term trends here. And, investing in just one company, even one that's as solid as Costco, that's probably not the best move based on, one conversation. Munger, he always emphasizes doing your research, being thorough.
Right, of course. Don't put all your eggs in one basket. But I think the big takeaway here is we've got to think for ourselves, right? Don't just follow the crowd.
Absolutely. Question everything, do your research, and don't be afraid to, go against the grain sometimes, especially when it comes to something as important as your money.
You remember, building wealth, it's a marathon, not a sprint. We all want to get those gains, but it's about those smart, sustainable choices, the kind that pay off over the long haul.
Couldn't have said it better myself. Tune out the noise. Focus on what really matters. Building that secure life, financially, personally.
This has been great. Really appreciate you breaking it all down for us. And for our listeners, we just covered a lot, but if you're feeling a little overwhelmed, just remember, knowledge is power. The more you understand about how the financial world works, the better prepared you'll be when those curveballs come your way.
That's right. Stay informed, stay curious, and stay engaged, even when it's not the most thrilling topic. It really is crucial in the long run.
Thanks for listening, everyone. We'll be back next time with another deep dive into the world of personal finance. See you then.